Well, let's ask Brett Manning if he seems to like that trade. What's up, Brett? Do you like that trade in HON?
Hey, how you doing, Jim?
I'm doing well.
I would need to look at it more than I have to make that decision, but I would trust Scott's instincts, generally speaking.
Yeah, and they're always good, especially when he does that right in front of our segment. So,
hey, welcome to it.
I'm a market timer.
It's a trade idea to take precedence. Yeah.
Well, all kidding aside, welcome back, Brett. So, we've had some interesting moves in the market where we thought things might be somewhat slow. We're on the beginning of earnings season, so we've had some bank stocks report, a few industrials and whatnot, but we've also had this little political turmoil. So, what's your overall takeaway as we sit here on midday Wednesday?
Well, I mean, I'm still kind of in a period that I consider to be slow in terms of my own trading, but that's not necessarily the idea that the market is not going to move during this period. It's just the idea that it doesn't tend to mesh well with the types of setups that I like to use, and particularly when you have the initial process of earnings season starting to forge a kind of identity. And every earnings season, I think, gathers a narrative behind it, where it becomes either surprisingly good or surprisingly bad or not really something that has a distinct impact on the narrative that exists ahead of it and possibly in terms of future estimates. And I think during the first maybe 10 days or so of earnings, we start to get a sense of what that's going to look like as far as the narrative as it develops and as we get some early stage earnings from different groups. And I don't think we have enough information yet to really pin that narrative on things here. So I tend to just kind of be a little bit slower, particularly with equity futures, until I get a sense that we've gotten past that process of forging that narrative. So I'm really open-minded right now. I talked with Gavin on Monday about the sentiment data backdrop, that we'd started to see a couple, let's say, yellow lights, but we didn't really see any big red flags or red lights in terms of sentiment data at this point. So there's a little bit more vulnerability, particularly in terms of options data and hedge fund alignment in terms of hedge fund tracking indices and how the S&P is doing. So an apparent sense that hedge funds are more exposed now on the long side in equities. So, there's a little bit more vulnerability to headlines. And then we've seen yesterday we saw out of Kaplan, obviously, starting to create a narrative that there's at least a faction at the Fed that sees July's rate cut as a one-and-done insurance cut, and that this is not an easing cycle, and that we're not going to do whatever it takes to get inflation back up to 2%, no matter what the situation is. And that's sort of maybe there may be two camps there, and Powell seems to be in the other camp, which is probably the most important point. A little bit more open to more easing if it looks like that's necessary, and I think the market's trying to figure that out as to which camp has sway there. And then, of course, more drama from the White House and also from the House of Representatives today. But yeah, and we could maybe talk more about that.
Yeah, well, why don't we, since it's the most recent and freshest. It kind of caught me off guard. I wasn't really paying all that close attention. So did the little move that we had in the market, you think that was attributed to kind of some of that turmoil that we saw just, a little earlier today?
You mean the impeachment
Yes.
process?
Yeah.
So, I think maybe, but I don't think. So, first of all, this is a really politically divisive idea to talk about, so I just want to make sure that everybody understands that we're going to approach this conversation really as just dealing with the, let's say, the political game theory landscape and the impact that it can have on markets, and really avoid taking sides in terms of partisan issues or even basic issues about what we think is right or wrong. Just, what are the motivations of the individuals involved on a political level, and how can that generate headlines that can impact the market, and whether or not the market will take those headlines seriously. So the situation as it stands is that there's been a running kind of civil war going on in the House of Representatives, which is, of course, controlled by the Democrats and is led by Nancy Pelosi. And the civil war is kind of that there's a further left progressive group that is, at least in the headlines, and at least very publicly, pushing for impeachment proceedings in House leadership, including Pelosi, and generally seen as the more moderate side for Democratic leadership is pushing it back against that. And that's the dynamic that's been in place for maybe a year even. But it's intensifying right now, and I have a theory as to why, but I want to explain one alternative theory that I think is probably not correct, but I think is maybe being portrayed in the press more. And that theory is to say that Pelosi is basically a firewall against impeachment, and that she's sort of playing chess in a house full of checkers players. And far-left progressives have become, let's say, more fed up with a moderate take on things because it hasn't gotten them anywhere, and there's a rising sense of urgency to take some more dramatic and decisive action, and, these more moderate Democrats are holding them back from just doing what's right. And there's that kind of narrative going on. And I think it's important to understand that in that narrative, understanding what Pelosi's motivations would be for people who are more savvy to the process of impeachment, it's easy to make the case for Pelosi, even in that framework, which is a couple points. One, it's widely seen that right now that the Republican voting bloc support for Trump is not at all united at this point, and that impeaching Trump would probably unite them behind Trump, because it would be very easy to be painted by conservative media as being a move by the Democrats to attempt to undermine the authority of the president in front of the presidential election campaign season. And it would probably be painted that way pretty easily. Pelosi probably knows this, and that it would look like that to people who are sort of the never-Trumpers right now, what I would call maybe the McCain-Romney wing of the GOP party. And maybe a lot of them, in terms of the voters, not the politicians, but the voters, may have started to identify themselves as independents at this point. So when you see things like a 90% approval rating among Republicans for Trump, I think they're not really being any more a part of that type of data set. And they're not really big fans of populism. They're not really big fans of tariffs. They're not really big fans of the decorum of this White House with the 2 a.m. tweets, but they're also not fans of Hillary and Obama, and they're also not serious Democratic supporters. I think of them as like a lost tribe in the wilderness of American politics at this point. But they would unite behind Trump, I think is the theory, if we were to move toward impeachment in the House, because it could be so easily painted as using politics and partisan politics in something that should be more serious. And I think that would be an easy picture to paint. And Pelosi knows that, and she knows that there's probably 5 groups right now, and that the Democrats have a greater chance in an election where the 5 groups are preserved, the 5 groups being the far right, the moderate right, the truly independent, the moderate left, and the far left. That's really all the camps right now coming into things for this next election season. And moving to impeachment would probably narrow that down to 2 groups. And when you make that shift in the political landscape, that probably starts to favor Trump. Because it favors incumbents, generally speaking. It's very hard. Very rarely does an incumbent lose. If you think of the last one was, I think, George H.W. Bush in '92, but you have to remember that Ross Perot got 21% of the vote, and he was basically taking 100% from Bush. And before that, you have to go back to Jimmy Carter, and that was during a severe recession with high inflation. And otherwise, every incumbent wins. So it's really stacked in favor of incumbents. So it's really hard to beat an incumbent. And I think narrowing the field down to 2 sides would seriously favor the incumbent. I think Pelosi knows that as well. But the main thing that she knows from this narrative that's popularly in the press, the main thing that she knows is that impeachment would be a hopeless endeavor, right? The Senate controls the hearing, and the Senate's controlled by the GOP. They get to decide what evidence to allow into the hearing, what witnesses to swear in, and Trump's legal team would be granted discovery, which means that they could subpoena and depose under oath virtually anybody in the world. Could be Hillary Clinton, could be Donna Brazile. They could take everything that makes Democrats look negative and drag it out into the public light and put it all over conservative media. That would be the net result of the process of an impeachment hearing, because the GOP would control it. And at the end of the day, they wouldn't impeach Trump because they would control the outcome. So you'd just be basically admitting into reality that process in front of the election. And I think Pelosi knows that as well. So there's this battle going on, and there's this idea of Pelosi as this firewall trying to prevent that type of process, which seems simplistically favorable for the Democrats, but when you look at it a little more closely, would be possibly disastrous for the Democrats. And she's trying to prevent that. But I think there's another level of this that's actually more important, and this is why I think it's really even more innocuous than it looks. And so probably the headlines aren't very important. And that is, I think that narrative is so easy to grasp that probably even the House representatives who are coming out publicly in favor of impeachment understand all that, but they also know that most voters don't understand impeachment very well. And the people who are most stridently, publicly in favor of impeachment are usually coming from districts that are really progressive in terms of the voting trends. And the voters don't understand the impeachment process, and the voters are in favor of it. And one of the problems with our system is that House representatives have to be reelected every 2 years. So they're essentially always campaigning. And I think that when you see something like we saw today, or something like we saw from Omar, or something like we've seen from any of the so-called squad, when they're talking about impeachment, I think that it's because it's a popular thing to be in favor of, even if the reality of the situation is that if it were to come down to a vote and they thought that if they were to vote yes for impeachment, that it would cause impeachment to actually happen, many of these same people would probably vote against it. So I think that it's more a campaign device because of how it's simplistically understood. I think most voters understand impeachment to simply be removal of the president from office for cause. And it's actually not. It just launches a process of a hearing that would be controlled almost entirely by the Republicans, and they would use it as essentially a platform for really getting a ton of good positive Trump campaign advertising and negative whoever the Democrat nominee campaign advertising, and it would be a gigantic process of that. So I think that's the game theory landscape, and I think that probably we'll see more headlines as we come into more campaigning, and none of it will really be very meaningful.
Gavin, I think you had a question.
Hey, what's up, Brett? How are you doing today?
Good. How you doing, Gav?
Doing good. Quick question for you. I'd be curious as to your thoughts on the follow-on, because, I'm just kind of following everything in the backdrop. Not like you were saying, I don't think this is anything that could realistically happen, but I think maybe the bigger knock-on effect for the markets, and I'd be curious as to your take on this. We've seen President Trump really lash out at Democrats in the past on anything along these lines, and the infrastructure project probably being a great example of where he basically said that there's no way he'd work with Democrats on it while they were trying to attack him. We have the debt ceiling coming on up in September, and of course we got Congress in recession. I think it's August 3rd to September 6th. I'm not sure on those exact details, but obviously this could be kind of the last thing that people are going to have left on the table ahead of that debt ceiling debate, which hasn't really worked its way into too much of the market lexicon here. But as we know, there's a wall of worries out there. How do you see this procession maybe impacting that debt ceiling debate, if at all, at least maybe on the noise level rather than having any particular substance?
I think that it's unlikely to impact that situation because I think that this is a lot of theater right now, and I think that everybody involved knows that, including Trump, including Pelosi, and they're trying to control the public narrative of that theater, and I think that because Pelosi is forced into the position of standing against it, and publicly so, and basically diving on the grenade, because it's not a popular position that she's taking with progressive voters. And she's campaigning too, and she needs to maintain her power. So she's really the one who's in the most difficult game theory dilemma right now. And I think that because she kind of has to take the tack that she's taking, and because she's also the principal adversary to Trump in the debt ceiling debate, which we saw very obviously last year, in terms of the real standoff toward the wall, where she popularly, kind of beat him in a game of chicken, as far as I think it was portrayed. She's that person, and she's essentially siding with Trump in this debate on a very superficial analysis. So I'm not sure that it really impacts the move toward that. And I also don't know if there's any particular thing that there would be a standoff over. I mean, do you see there being something that the wall was conspicuously the big standoff point in terms of putting that in the budget? Do you think that we'd be heading toward that type of situation again?
No, but I mean, kind of like you were saying, as the impeachment being more theater, it feels like the debt ceiling a lot of times is a little more theater. Now, I don't know if there's one sticking point. That would be something that we'll be going over with Carmine in the coming weeks. Certainly, obviously, we've seen border funding being a key stepping stone, and I'm not sure the exact number over what the budget was, but we saw it tripped over $6 billion, or I think it was even $3 billion in funding for boundaries and a wall before. So it's not like they need a big point to get over to throw in the middle of as a political football to really battle over.
It's unpopular. That whole process was unpopular. I think nobody benefited from that process, and they're moving more into a campaigning situation. Maybe it was safer last year to turn the debt ceiling into a big standoff than maybe it would be this year, especially since it's a risk. If you take a stand on something meaningful and you're trying to get favor from a particular voting bloc, you're risking losing other favor, and at the same time, you're also risking losing. Because if you don't get what you want, so you could lose face with everyone. And I don't know if anybody's in this situation thinking that they need to be doing that right now.
Yeah, but I mean, I guess from when we're just talking about the competitive standpoint, we could definitely see the administration put some things in the budget that would probably not be palatable to a lot of Democrats that they could use against them in a campaign speech. What that is offhand, I don't know, but
it's possible.
The more politicized this impeachment gets, the more politicized I think that budget could get, and therefore a little bit more of a battle going into that election year. I'm just curious to see if we start seeing the president using that kind of as leverage in this fight.
Well, I mean, the principal dynamic that I'm trying to identify here, and this may play into what you're saying, is that I think we're going to increasingly see far left progressive House Democrats who, especially if they're vulnerable in any way coming into 2020, which is kind of an oxymoron a little bit, but to use the idea of impeachment as a way to get more exposure and curry favor with their own voters, just to simply show that they're in favor of it, that they're not going to accept this president's antics or whatever. And that none of it really has to do with wanting it to move toward impeachment because of all that would really imply. And so it increasingly puts Pelosi into this position of being this sort of like the mean parent who won't let the kids go on sleepover or something, even though it's not safe because the kid they want to go sleep over with, the parent, their dad was just released from prison after some kind of assault charge or something, and it's not a good idea for them to do it. But there's the mean parent who has to tell them no, and that's unpopular with the kids, And I think that there's a kind of similar dynamic here. Pelosi's going to consistently be put in that position. And so I guess would she do something to counterbalance that, to try to increase her own popularity? And maybe it's standing up to Trump around something that he might try to put in the next budget. So I guess it could play in that to that extent.
That answers my question. Thanks a lot.
Okay.
All right, so Brett, let's assume that this is a little bit of political theater, and we've got the little bit of rollover that we had in the market. Why is this not a buyable dip at this point? Wouldn't this be the case for weak-handed shorts getting a little overzealous, even though it's not?
Probably.
It's so. At what point are you looking at to maybe buy this dip?
Well, as I said, right now I'm not looking to do much trading. So I can see this being something that's a viable dip. I may take the trade. We'll see this afternoon if I see the pattern set up just right. But I just generally speaking, during the first week or so of earnings season, I just pretty much stopped trading index futures. And in the week leading up to it. So last week and this week and maybe the first couple days of next week would be a period where I would be focused more on the gold market and crude oil and currencies, and just let the narrative around this earnings season start to establish itself a bit more. Simply, so here's the main reason. So I navigate my setups on the basis of an understanding of what we've talked about as my tape composition model, and my understanding of who's underneath the tape, what their motivations are, how they're positioned. I try to make inferences about all these things because I believe it gives me a special edge if I get better and better and better at doing that. But the money that's moving this market right now, because we're in the early stages of earnings season, is a different kind of money with a different set of protocols. It's repositioning where there are large market participants with key positions in major stocks who are repositioning as earnings come out, and they basically have turnover that's once every 3 months, as they start to make fundamental assumptions, very fundamentally oriented, long-only, equity-only, stock-picking funds. who control huge amounts of the market, and are making decisions based on the information that they're getting about different sectors, based on how earnings are coming out, how much risk they want to maintain in their portfolio around those positions, and they're making decisions on a basis that's very different from the types of decisions that move the market 2-3 weeks ago or 2-3 weeks from now, when they've done their once every 3 months portfolio turnover based on their understanding of the fundamental environment for their primary positions, and the market is back in the hands of the rest of us folks. And I think that I try to stay away from that because it fouls up my tape composition model understanding, and I don't have confidence or conviction when I get into a trade. And I think it's really important that you have a model that allows you to have conviction when you enter a trade, or you won't be able to make responsible decisions in terms of managing the trade.
All right, that makes sense. So why don't we talk a little bit about the crude market? What was your overall sense after we actually had a headline number that was pretty close to in line with expectations, but
it's amazing.
Yeah, but there was a pretty decent drop in production. Yet here we are trading at our session lows around the $57 level.
Yeah, and I feel like what entered the picture yesterday around Iran is it's tough to know what that situation was. I mean, first off, on the data, yeah, you're right. It was top line. It was pretty much in line, but the products weren't. So I don't know if you saw gasoline and distillates, but they usually drive, I think, more of the picture when they're way off than crude oil does. And gasoline was a huge build with an expectation of a large draw. So that's a very bearish data point because that's going to translate through refiners into crude over the next couple of weeks in terms of the data points. So yeah, production's been picking up, but when you see a big build in gasoline when you're expecting a draw, you can expect that then that basically means that refiners who refine this gasoline and are holding it and their inventory levels are up are going to draw less crude over the next week or two and refine less because they've got this stockpile now of gasoline and distillates at an even bigger build. So they've stockpiled up a bunch of products that they refined from crude oil, so they're going to be drawing less through. So you can basically pencil in probably estimates of a big build in crude oil next week and the week after, just based on what we saw in products this week. So from that perspective, it was a bearish data point, and it knocked us back down. The question is, where does this narrative stand with Iran? Yesterday, we had the White House make... So there's two things that were important yesterday. One of them was that there was an alleged notion that Iran is willing to come to the table and negotiate their missile program. That was the less important news. The more important news is how the White House apparently reacted to it, right? With Pompeo and Trump both coming out and saying, we're no longer seeking regime change. We want to deal with this regime. We think that they're coming to the table. They're acting in good faith, in good spirits. We see things moving in the right direction here. That was kind of the spirit of the messaging out of the White House yesterday around Iran. And that's the important thing. It's not really necessarily what Iran does. It's how the White House is going to approach the situation, whether they're going to be super hawkish or whether they're going to be, trying to come towards some resolution, even if imperfect. And I think that the messaging shift from them was more dramatic than maybe anything that Iran did. And if that's become a decision by this White House team to maybe kind of, to not make Iran their major priority right now and to basically just try to push something that's superficially good into place there, or maybe it's carrot rather than stick of just saying we're willing to really embrace and embolden the current leadership in Iran right now as long as you make any gestures that make us look good here, and maybe sending that message out there. And I guess Iran somewhat refuted today the idea that they're coming to the table about the missile program, but they seem to, really manage how they're portrayed. So who knows what the reality is there. But we dropped big on these headlines yesterday when we saw how the White House was handling messaging this. So, I mean, Trump, oil just got smashed, right? I mean, it dropped 250 basis points, or 250 ticks in just, about half an hour. That's a big move. And we started to maybe trickle back up against that, and then we got this gasoline and distillates build today in the data, which kind of suggests that we're going to see maybe some rougher estimates come out then for next week. So I think that's, I think that we barely, if you just look at the technical pattern, we got back up to about the 61.8% retracement of the move down from the April highs to the June lows. in this bounce, and we did so with a kind of bearish sense of you form one high, you pull back, and then you get a barely higher high, and then you pull back down through the midpoint of the range around that first pullback consolidation. So we're kind of under the midpoint there now of the pullback that we saw in early July. That to me, it's one of the. A week ago, I was looking to short oil because I was looking for a lower high off of this. Now we've got a barely higher high and move back down. So it sets up to me a bearish pattern, I think. And if the White House is taking this tax, and if the data sets deteriorate, then I'm starting to develop a bearish bias on oil. I don't have a setup in place, but I'm looking for one at this point. I'd like to see something that gives me a sense, and it may take a couple days to build out. Now we're past the Wednesday data. It probably will be more of a focus of mine over the next 2 days to try to see if we get a setup that looks like something where I think we could check maybe 55 or maybe 54.50 after some kind of consolidation of this move down that sets up a level break or something where I can identify a risk point.
Just drawing a trend line. Looks like it would maybe undercut right around the $60 level. Would you be looking for a pullback, or that's not really a pullback, a snapback?
Which trend line?
I just drew a quick trend line on the August chart from the April 23rd high, connected the dot to the most recent high in July, and so.
Oh, I see. Yeah, okay. I'd like to see an underside, but it's kind of tough to get there. If you do the lows, June to July lows, and form a maybe confluence between those two lines, but I don't expect it to bounce that aggressively. So I think if we just try to hold support here, or we've got an important level just a little bit lower, then we try to bounce back. I would like to see something that's more pattern-based than level-based, something like a descending triangle gradually come into play. And maybe if we've got some kind of geopolitical headline that maybe is a face value bullish headline and it can't really rally very well on it, then it starts to give me a little bit of something that all around fits as a setup. And it's not impossible that in this case, because of just a sense of this week's data and how it will play into refiner activity, that I would do what I don't normally do, which is take a trade early in the week, next week, in front of the data, hoping that I have some cushion in place by the time we get data. I would like to see a pattern now on the 15-minute chart or the 9-minute chart that just gives me a sense of like the type of order flow that I think suggests that there's positions that are starting to be leaked out into the market by people who maybe hold a great deal more and would start to accelerate getting rid of it if we start to break levels. Just that kind of tipping feeling. But that's more qualitative, and I just have to see something that makes me get that sense, and also gives me a falsifiability level for a stop.
All right, sounds good. One of the things that you talked about yesterday was the move in silver. So I'm going to look at the SLV today because we had a breakout yesterday, and this one is still continuing to break out. Actually, so I hadn't noticed that the action towards close, we kind of pulled back in, but here we are now breaking out again. And GLD...
Metals are strong.
Right, it's just taking a second for my chart to load up here. So GLD kind of had a little breakout, but not to the extent of silver. So what's your take?
Silver's playing catch-up.
You think it's just playing catch-up now after the move that we've seen in gold? Yeah. Okay.
It didn't really participate before. I mean, if you objectively, like the move that gold has made since May versus the move that silver has made since May, and really over the last year. I mean, silver's been just sort of wallowing along some lows, and has finally started to pick up out of that, and I think that we're finally starting to get the sense that the move in gold and precious metals in general, and maybe in terms of convergence of monetary policy, is stickier, and it's not a sort of one-off quick move. Then you start to get, let's think of silver as like a second-tier gold. You know, you get the move as people start to look for a way to capitalize on the same thing, and they see that, you know, in terms of year-over-year performance, silver is not nearly as profoundly already up as gold. I think that money starts to trickle into it. Yeah, I mean, I think that's, I don't know if there's a problem where there was some kind of deep-level fundamental catalyst yesterday for silver. I don't know that. If there is somebody who knows it, please write in. If there was a mind strike or something, I don't know. But I think that this is probably just a technical breakout and playing catch up to the move that gold has made and the overall kind of posture that gold is in. I mean, it's at multi-year highs and it's in a trending upward rally, and sentiment is starting to move positive on gold, and silver is still, just barely moved above its 200-day moving average. It's been kind of in a bearish posture. If you look at something like the monthly chart, the two are very strikingly different.
I'm also taking a look at the copper chart. So I now have a copper
which is important.
Yes.
Yeah.
So now, is copper set to play catch up as well? I do see a little bit of a bottoming pattern right around the, how's it quoted? Is it 260, 261, right?
270. Well, I see. Yeah, you mean longer term? Yeah, right. So I think that I think silver is, the kind of it sometimes is aligned with copper. It sometimes is aligned with gold. Gold and copper are very important in contrasting one to the other. It's why the copper-gold ratio is a good economic indicator. When copper outperforms gold, it's usually good for the economy. When gold outperforms copper, it's usually bad for the economy. If you just look at very long-term cyclicality, and right now, the fact that gold is the outperformer and copper is the underperformer, if you look at any time frame chart, in terms of phase of cycle, you're kind of seeing that. I think that you're seeing that silver is rallying in its manifestation as a precious metal right now, rather than as an industrial input, and copper really doesn't have value as a precious metal. So usually there's that differentiation. Sometimes when you've got an industrial metals very strong, and things like iron ore and tin and copper all doing well, silver actually gets a boost and gold doesn't. But I think in this case you're looking at a rally in precious metals.
All right. Well, and the reason why I brought it up is because this a breakout above 275 looks somewhat appealing and maybe doable. What do you think are the conditions that would get that in place? Is it obviously something from China that would provoke it? But I was hoping that maybe this might be one of those lagger that you might be able to catch up with. You might be able to jump on to, and it would play catch up. But it doesn't sound like that might be the case here in copper.
Well, I mean, so first of all, if I look at let's just say a daily chart that encompasses the last 2 years of data on copper, what I see when I look at that pattern, really, it may turn into a bottoming pattern, but for me, it looks like something that sets up as a bearish breakdown pattern, more than anything. I think if you connect the lows that we've seen since last July, it's almost like the inverse of what we saw, except on a smaller time frame, the upside down version of what we saw gold just break out of to the upside. In that you've defined a series of lows that are all right around the same level in a market that's been more or less trending down for the last 18 months, and that has some larger time frame fundamental drivers to the downside in terms of where cycle is, in terms of where growth is, in terms of looking at global PMIs, and in terms of looking at the trade war. Those are all things that would, but I mean, I'm sure the sentiment is already showing that, but you're tracing out a consolidation of a downward move and forming a series of lows, and I just kind of see that there's a possible bearish breakdown that's gradually setting up to test the underside of 250, and maybe it breaks down, tests that, holds it, comes back up, and it's kind of like a failed breakdown, and that sets up a more larger time frame bullish pattern. It could just be that these lows are going to hold and just reverses and heads back up, and I guess it would have to go back up quite a ways for me to start to feel like it's not part of a bounce in front of a breakdown.
Okay, well, it sure looks like there's a whole lot of support that comes in right at 250.
Yeah, no, I understand, but again, if you look at the weekly chart on gold. Mm-hmm. Look at the resistance along 1350.
Yeah, it's going to take me a minute to get the gold chart up, but give me a sec.
Sure. I think it's an important example of this precise kind of dynamic.
Yeah, bear with me a second here. I had to rebuild all my charts. You know how that goes.
Well, you can look at GLD if it's easier.
Yeah, I'll take a look at GLD just because.
GLD's fine.
Yeah. All right, so we're going to look at
before this latest
weekly.
before this latest breakout, if you scroll it back so that you're looking at GLD as it was in May or so, when I bought it.
Okay.
That's an upside-down version on the weekly chart of what copper looks like on the daily chart.
Mm-hmm.
Agree?
Yep, it does.
Well, look what happened. Will it be an upside-down of that?
Yeah, well, actually, the reason why I highlighted that 350 area is actually to highlight your point that would be the place of vulnerability, which would I could visualize that I could see that breakdown occurring because of that, because of all that support that comes in right at 350. That's the vulnerability point that could get things going to the downside. So, well. Yeah, I was kind of hoping for a sneaky trade to the upside in copper, that maybe it would rally with silver, but
well, now if I'm going to make a case against what I just said, probably given the situation that we have with the trade war, you've got a really difficult sentiment environment. You probably have a pretty decent. In fact, I'm going to take a look at the CFTC data right now on it. But you probably have a pretty decent amount of short interest hanging out already in there, which means you could end up being right. Yeah, you've got large speculators are heavily short copper right now. So that I wouldn't take the bearish trade that I just outlined to you. Technically, it looks postured that direction, but what could ultimately turn this into a squeeze is the fact that people are massively short copper right now, according to CFTC data that I see. So yeah, I mean that does it wouldn't put me in it long. What it would do is prevent me from taking that short. It's the same thing. I would have ruled out the gold long if we had a massive speculative gold long position in May in gold. I would not be in this GLD position that I'm in now.
Yep, that makes perfect sense. And you must have read my mind, because I was going to ask you where the positioning was in copper. But I think that pretty much covers that. Any other markets we need to talk about?
No, I mean, I guess just to anybody who's with me in the GLD, just stay with it. It continues to look constructive. I missed the futures ad. That's unfortunate, but that's why we have the GLD position. And it continues to work well. It looks like a constructive pattern. I would say that it should continue to work. Other than that, yeah, no, I think that we're pretty good.
All right. Well, as always, thank you so much for joining us today and going over these markets. Always good to get your perspective and laying out your game theories and whatnot. So, till next week, my friend. We'll talk then.
Okay. Take care, Jim.
You too.